This is the one strategy that nearly quadrupled how much I take home in my video business. And if I had to start over, I'd use it from day one. If your business is making money but you still feel broke, your money habits are the problem. That's why today I'm breaking down Profit First, a system that ensures you actually keep more of what you make. Plus, I've made a free Excel sheet to help you get started, and you can grab it from the link down below in the description. When I started my business, all my income went into one bank account. If I saw money there, I spent it. Needed a new camera? Bought it. The problem with this, I wasn't actually paying myself first, and I had no system for making sure that the business was actually profitable. Profit First flips the way that we typically think about business finances. Most people take revenue, subtract expenses, and hope that there's profit left. Wrong approach. With Profit First, you take profit first and then cover expenses with what's left. This forces you to control spending, pay yourself consistently, and keep your business financially healthy. I've been using this system for 4 years, and they've been my best financial years ever. Coincidence? Maybe. But if you want more control over your money, I highly recommend giving this a shot. Now, quick disclaimer, this is not legal or tax advice, just what's worked for me. Be sure to consult with a financial professional if needed. Think of your business income as one big bucket at the top. Every time you get paid, that money flows into smaller buckets. Profit, a percentage that you take right off the top. This money's for you. Owner's pay, your salary or regular income from the business. Taxes, set aside money so that you're never scrambling at tax time. Operating expenses, that's what's left for gear, freelancers, marketing, etc. Okay? Now let me show you how this works inside the free Profit First Excel sheet that I made. The sheet has 2 tabs, one for LLC non-salaried videographers. If you don't take a salary, this tab calculates everything based on percentages. The other is for S-Corp salaried videographers. So if you take a salary, this tab adjusts a little bit differently to track both your fixed payroll and fluctuating business income. If you don't take a salary, the Profit First book suggests 50% owner's pay, 5% profit, 15% taxes, and 30% expenses. These numbers can be adjusted to fit your unique situation. If you do take a salary, enter your exact paycheck amount pre-tax and pre-deductions, and then adjust the percentages for profit, taxes, and expenses accordingly. Now here's how you track everything step by step. Twice a month on the 1st and 16th, you'll log how much you made in the total income column. The first section tracks all income earned between the 1st and 15th of the month. I'll typically enter this number on the 16th by logging into my bank and adding up how much was deposited during that time frame. Then, the second section tracks income from the 16th to the last day of the month, and I enter this on the first day of the following month. Once you enter your total income, the sheet automatically calculates how much should go into each bucket: profit, owner's pay, taxes, and operating expenses, based on the percentages that you've set. This gives you a clear number for how much needs to be transferred into each account. For those who aren't taking a salary, this is straightforward. Every bucket scales proportionally with your business income. So if you make more, you take home more. If you make less, all your allocations adjust down. For those who do take a salary, it works a little bit differently because your paycheck is a fixed number. This means that profit, taxes, and expenses are what fluctuate. Your salary is prioritized first, followed by taxes and profit, while the operating expense bucket is the one that takes the hit if you didn't earn enough in that period. That's the magic of Profit First. It forces your business to cover essential payments first and restricts unnecessary spending. There's one key feature built into this sheet. If you don't make enough to cover your salary and required expenses, the income box turns red and it flags that as a shortfall. When this happens, you'll need to either cut expenses or find additional income to make up the difference. I also recommend making a note in the notes section when this happens so that you can track patterns over time. To put this into a real-world example, let's say I'm a salaried video business owner and I made $8,000 from the 1st to the 15th of January. I enter $8,000 in the total income column. My spreadsheet calculates that I need to allocate $1,200 to profit, $2,994 to my fixed salary, $1,200 for taxes, and $2,400 for operating expenses. Since this adds up to $7,794, I have a small surplus of $206, which means that the business brought in enough to cover everything, and I can make a note that extra amount. But what happens if it's a bad month? Let's say that I only made $3,000 in the second half of the month. Once I enter that into the sheet, the income box turns red, telling me that I'm over budget by $1,794. That means that I either need to adjust spending, bring in additional income, or consider reducing discretionary business expenses for that period. So this happens before I spend any money, giving me time to make adjustments. By now, you understand how the sheet tracks income and allocates funds. But where does the money physically go? Well, Mike Michalowicz, the author of Profit First, recommends 5 separate business bank accounts. One for income, one for profit, one for owner's pay, one for taxes, and one for expenses. This setup ensures that each bucket is separated and you don't accidentally spend money meant for something else. Now, if opening up 5 bank accounts sounds really overwhelming, some banks allow you to create sub-accounts or buckets within a single account. And I know Ally Bank offers this feature, but check with your bank to see if they have something similar. Here's how I personally manage my accounts. I have one business checking account where all client payments are deposited. This is my income account. I then have a business savings account where I transfer my allocated profit every month, and I let that money sit there until I pay myself a quarterly bonus. My taxes go into a separate business savings account so I can easily pull from it when I make my quarterly tax payments. Finally, my operating expenses stay in my business checking, and my payroll service Gusto automatically pulls my salary from that account and deposits it into my personal checking account twice a month. So twice a month, I log into my spreadsheet, I enter my income, make my transfers, and move on. It takes less than 10 minutes, and at the end of each quarter, I get a profit distribution that often adds up to thousands of dollars. That's money that I can use to invest, pay down debt, or just reward myself without worrying about hurting the business. Quick break. If you're still trying to figure out what to charge for your video services, I've got a free pricing calculator at videopricetool.com to help you price your work profitably. Okay, so Profit First forces you to run a financially responsible business. If you're out of money for expenses, you don't spend more. If you're running low, you increase sales instead of pulling from profit. You stop wondering, where did all my money go, because every dollar has a purpose. Since using this method, I no longer make impulse gear purchases or wonder if I'll have enough for taxes. Everything is pre-allocated. If you're tired of working nonstop but not seeing the money, Profit First puts you in control of your cash flow so you actually keep what you earn. If you want to start right now, download the free Profit First Excel sheet in the description below this video. Also, don't forget to check out videopricetool.com if you need help pricing your videography services profitably. Let me know in the comments if you have any questions, and if this video helped, be sure to like, subscribe, and I'll see you in the next video.